Alright guys, I'm back again with another video about credit cards. This time it's about how using your credit card can affect your credit score.
Is this how it works in America, dude? You gotta understand things. In order to build credit, you need to... In order to get credit, you need to make credit. In order to make money, you spend money. You build credit by just opening fucking credit cards,
No,
bro.
dude, you pay off credit cards. You pay off.
That's how you pay off a credit card. Yeah.
My two most popular videos are about credit cards, and in the comments I've gotten a lot of questions about this. Specifically, how does utilization affect your credit score? And should you pay off your credit card in full to get the best credit score? Modifying how you use credit cards is not going to have a serious impact on your credit score. Credit scores are designed to represent your lifelong habits with credit to show a lender how risky you are for them to lend you money. If I was a bank and I was thinking about lending you money, how would I feel if I knew that you could improve your credit score by 200 points in 6 months? Basically, that makes a credit score useless to me. The whole reason a credit score is valuable is because it's hard to change and represents your long-term habits as a borrower. Now, I know a credit score is a nice number that can feel like a goal, something mental to latch onto that you ascribe your self-worth to. And when you see that score go up, it makes you feel good about yourself. But honestly, it's not the most important thing about your finances if you're in debt. If you're in debt, you should be using numbers like improving my net worth, reducing the amount of total interest that I pay to these credit card companies over time. If you have a total of $5,000 of credit card debt at an average of 20% APR, that costs you $1,000 in interest every year. That's a much more critical aspect of your personal finance health than 10 or 20 points on your credit score. So focus on reducing the amount of interest you're paying in credit card interest before worrying about your credit score. Your credit score honestly shouldn't matter that much in life. Maybe it matters when you're going to buy a house, if you're going to get a car loan, but it's really not the most important thing about your finances. Now, with that caveat out of the way, I want to talk to you about how credit card utilization affects your credit score. So this is important for people who maybe are about to buy a house, and they want to think, how can I eke out a few extra points in my credit score to make sure I get the best rates on my mortgage? Now, even in that situation, I would say you should never spend more in interest to get a better credit score. But luckily, you don't have to. You can get a perfect credit score without ever paying a dime in credit card interest. Utilization is the percentage of your total available credit that you are currently using. So if you have $10,000 credit line and you're using up $3,000, you have a balance of $3,000, you have a 30% credit card utilization. Now, you've probably heard all sorts of guidance if you look this up. Best to keep your utilization under 30%, under 20%. Now, all these numbers aren't strict boundary lines. They're just representing the fact that in general, the lower the utilization you have on your credit cards, the better it will improve your credit score. Now, if there's all of this we're talking about maybe 15 to 40 points of your credit score is worried about utilization. It's only one of many factors involved in giving you your credit score. Now, if you look at this chart by creditkarma.com, you'll see that that general trend is followed. In general, people with lower utilizations tend to have higher credit scores. Now, the main point in this video is that there's lots of rumors around out there that say you should always leave a small balance on your credit card. This little bar at the left side of this graph is the reason why. There's some facts out there that say that people with 0% utilization actually have a slightly worse credit score. Now, first of all, I take issue with this. This graph does not show what your credit score will be if you have these utilizations. This graph shows that average Americans with 0% utilization happen to have a slightly lower credit score than average Americans with 1 to 10 or 10 to 20. We all know correlation does not imply causation. It might not be the fact that they have 0% utilization that gives them a lower score. It may just be that the type of people that tend to have 0% utilization might be the type of people that tend to have lower credit scores for other reasons. Maybe a lot of them have derogatory marks on their credit scores, and now they're very careful about not using their credit cards at all. But those derogatory marks, those type of people tend to have lower credit scores, even though they have 0% utilization. So there's a question out there whether having a 0% utilization really is even worse than having a 1% utilization. So my general advice would be just focus on keeping your utilization fairly low. And I'll give you some tips on how to do that in a minute. But if you really want to make sure you don't have 0% utilization, you want to be on that tallest bar on this graph, you want to have somewhere between 1 and 10, 1 to 20%, that does not mean you have to carry over a balance on your credit cards. When you get a statement in the mail that says you have a $500 balance, you can pay off your credit card in full, and that $500 is still reported to the credit agency. So if you have a $10,000 limit, they will report, oh, Joe Blow spent $500 out of their $10,000 limit, so that's a 5% utilization, even if you pay off that entire $500 when your statement is due. The credit card company will report your current balance usually when your statement is generated. So even if you really care about having a slightly more than 0% utilization, it doesn't mean you should maintain a balance, especially since maintaining a balance means you're going to owe interest. You should never pay interest just to try to get a credit score, especially since you can have good, non-zero, low utilization reported even if you pay off your statement balance in full. And if you want even another reason for why you shouldn't care so much about this, the impact of credit utilization on your credit score is instantaneous. It just captures a snapshot or a moment in time. So if you, by mistake, buy something really big, say a $4,000 TV on a credit card for 1 month out of a $5,000 limit, that's going to be an 80% utilization, which will ding your credit score by 10, 20 points, only while that balance is maintained. If 2 months from now you pay off that entire $4,000 bill, your utilization goes back down to just whatever your regular spending is on your credit card, your credit score will instantly rebound. So you don't even have to be worrying about this unless it's just in like the 6 months before you're ready to apply for a mortgage. But let's get down to the nitty-gritty of how utilization works. First of all, both your per card utilization and your overall utilization are reported to the agencies. So that means if you have one card with a $10,000 limit and another card with a $10,000 limit, and you have one at a $1,000 balance and the other at a $2,000 balance, one is reporting a 10% utilization, the other is reporting a 20% utilization, and your overall average credit card utilization is 15%. Now, I'll give you a quick example from my personal experience. This may sound crazy, but I have like 10 or 15 credit cards open. Almost all of them have a zero balance right now, and then I use 1 or 2 cards for all my regular daily spending. My credit score is well over 800. Carrying this zero balance on all these credit scores has obviously not impacted me. So suppose you are one of those people who really want to get the best out of your credit score in a short time period because you might be applying for a mortgage soon. Here's some things you can do to make sure your utilization is between that 0 and 20% range. Easiest of all is just to use your credit card less. Use your debit card or cash for purchases in the months leading up to the time you think your credit's going to be pulled. That will make sure you keep your utilization low. If you're worried about your utilization being high because your normal spending is such a large portion of your credit limit, request that your credit limit is increased by your credit card companies. If you're in good standing, they will very often be willing to increase your credit limit. Another idea is to get into the habit of making a payment or two in the middle of the cycle. Instead of your balance slowly going up over time, over the month of using your credit card, let it go up, chop it back down, let it go up, chop it back down, and it will never get up above that 10 or 20% utilization limit. As I said before, both your per card utilization and your overall utilization matters. So if you have one primary card and you think your utilization might be creeping up on that card to some significant portion greater than 20 or 30% of your limit, why don't you try spreading your limit out across multiple cards? This can be especially important for some store credit cards that have very low limits. Some store credit cards only have a $500 or $1,000 limit, and so even just 1 or 2 normal expenses can get your utilization for that card above that 20-30% line. Here's another crazy thing you could do. You could open another credit card. Now yes, recent inquiries, a hard credit pull when you open a new credit card will ding your credit score, but that's actually a much smaller component of your credit score than your utilization is. So if I can summarize this video, do not listen to ridiculous advice that you have to leave a balance on your credit cards to build your credit. They can still report utilization, non-zero utilization, even if you pay off your balance, your statement balance in full every month and avoid ever paying a dime in credit card interest. Second of all, I don't even think it really matters having slightly more than 0% utilization. I have 0% utilization on almost all of my credit cards, and I've never had a problem with my credit score. I think that's an issue with correlation and causation in graphs like this from Credit Karma. As I said before, just because many people who have 0% utilization have lower scores than people with 1% utilization does not mean that you having 0% utilization will make your score go down. And third, utilization is always temporary. Its impact to your score only represents what your utilization was that last month. So your credit score will bounce around between a range of like 15 and 40 points every month as your utilization changes. And if you really need to apply for new credit shortly, only worry about your utilization in the few months leading up to that. Otherwise, you should never worry your brain about your credit card utilization. My best recommendation as a regular credit card user is to set up auto pay on all your credit cards so it pays off your full statement balance in full from your checking account every single month. Never pay a dime in interest, never worry about missing a payment, and you just don't have to worry about the impact on your credit score. All right, 2 things to close out the video. First, you might have heard me mention that I have over 10 credit cards open. That might seem ridiculous, but my next video is going to be about that. And it all comes down to taking advantage of bonuses and offers and cashback rewards that these credit card companies offer. Once you're out of the cycle of credit card debt and you're never paying any money to the credit card companies in interest, you can actually get money from them from all these rewards that they offer. And second, I've recently built a website called chaostheoryconsulting.com. I've had a couple requests for personal one-on-one consulting opportunities about personal finance, debt management, and budgeting. Through this website, you can send me an inquiry if you would like to do something like that with me, either remotely or setting up time with me where I'm from in Eastern Pennsylvania. So check it out, chaostheoryconsulting.com. I hope this was useful. Hit me up with more comments. The comments are what give me ideas for future videos.